What if I told you that while most traders are chasing momentum stocks at their peaks, there are three blue chip companies on the NSE that institutional money is quietly positioning for major moves? And what if I told you that the data is hiding in plain sight, just waiting for someone who knows where to look? Welcome back to Market Edge, the podcast where we cut through the noise to bring you actionable insights that can actually move the needle on your portfolio. I'm your host, and today we are diving deep into a comprehensive technical analysis that's identified three compelling opportunities that most retail investors are completely overlooking. Here's what makes today's episode different. We're not talking about hot tips or gut feelings. We're talking about cold, hard data, RSI divergence patterns, options flow analysis, and institutional positioning that tells a story most people aren't reading. By the end of this episode, you'll have three specific stock names, the technical rationale behind each, and most importantly, the risk management framework to approach these opportunities like a professional. But first, let me ask you something. How many times have you bought a stock after it's already run up 20 or 30% only to watch it reverse the moment you get in? If you're nodding your head right now, you're not alone. The secret that separates professional traders from retail traders isn't access to better information. It's the discipline to buy when others are selling and the analytical framework to identify when that selling has gone too far. That's exactly what we're going to explore today with three NSE stocks that are showing textbook oversold conditions combined with something even more powerful, institutional accumulation through the options market. When you see retail investors selling and institutions buying, that's when the real opportunities emerge. ITC Limited, ITC, the transitional play. Our second candidate, ITC Limited, at 416.35 rupees, represents a different type of opportunity. With an RSI of 44.7, ITC isn't in extreme oversold territory like HINDUNILVR, but it's approaching that zone while showing significant institutional interest through options positioning. What makes ITC compelling is its position in what I call the transition zone. That technical area where a stock is neither clearly oversold nor clearly overbought, but is setting up for a significant move in either direction. The 30-day decline of 3.8% has created technical damage that needed to happen to clear out weak holders, while the modest 7-day change of minus 0.3% suggests that selling pressure may be stabilizing. The option story here is particularly interesting. Call option open interest of 39,208 contracts represents substantial institutional positioning, and while there's been some recent reduction, the absolute levels remain significant. The tobacco sector's unique characteristics, high dividend yields, defensive business model, regulatory overhang, create a complex investment thesis that institutional players understand better than retail investors. ITC's technical setup suggests we might be earlier in the reversal cycle compared to HINDUNILVR. This creates both opportunity and risk. The opportunity is that we can potentially establish positions before more obvious oversold conditions develop. The risk is that the stock could continue declining if broader market conditions deteriorate. The moving average relationships show ITC trading below both 10-day and 20-day SMAs, but the proximity to these levels means that a relatively modest recovery could quickly restore neutral technical conditions. This is important for risk management. The technical damage isn't so severe that recovery would require a major fundamental catalyst. For professional traders, ITC represents what I call a scaling opportunity, a position that can be built gradually as technical conditions improve. Initial positions can be established at current levels with additional accumulation planned if the stock moves towards more extreme oversold conditions. State Bank of India, SBIN, the institutional favorite. Our third candidate, State Bank of India, at 800.005 rupees, might surprise some listeners. With an RSI of 53.7, SBIN isn't showing the same oversold conditions as our other candidates. So why is it in our top three? The answer lies in the options market and what it tells us about institutional positioning. SBIN has call option open interest of 87,113 contracts, the highest among all stocks in our analysis. This massive institutional positioning suggests that sophisticated market participants are expecting significant upward movement. despite the stock's neutral technical readings. When you see this level of institutional interest, it's worth paying attention. The banking sector context is crucial here. As India's largest public sector bank, SBIN operates in a complex regulatory environment, but it also benefits from government support and systemic importance. The stock's recent stability, only 1% gain over 7 days and 1% decline over 30 days, suggests that it may be building a base for future advancement. What's particularly interesting about SBIN is the disconnect between its neutral technical readings and the massive institutional positioning. This suggests that institutions may have information or insights that aren't yet reflected in the stock's price action. In my experience, when you see this kind of positioning divergence, it often precedes significant moves. The risk profile for SBIN is different from our other candidates. While it doesn't offer the same oversold entry opportunity, it provides exposure to institutional positioning that could drive significant upside if banking sector sentiment improves. The trade-off is that entry timing becomes more critical. We are not getting the same margin of safety that oversold conditions provide. For portfolio managers and institutional investors, SBIN represents what I call a momentum anticipation play, positioning ahead of expected institutional flows rather than reacting to oversold conditions. This requires more precise timing and risk management, but the potential rewards can be substantial when institutional positioning aligns with sector rotation. Let's wrap up with the key takeaways that can actually impact your trading results. We've identified three distinct opportunities in the NSE market: HINDUNILVR as an oversold reversal play, ITC as a transitional opportunity, and SBIN as an institutional positioning play. Each offers a different risk reward profile and requires a different approach to risk management. The common thread connecting all three is the combination of technical analysis and institutional positioning data. This isn't about following hot tips or gut feelings. It's about systematic analysis that identifies opportunities where risk reward profiles are skewed in your favor. But here's what I want you to remember most. The best technical analysis in the world is worthless without proper risk management and disciplined execution. These opportunities exist because markets are inefficient in the short term, but they require patience, discipline, and systematic approach to capture effectively. Your homework for this week is simple but crucial. First, add these three stocks to your watch list and monitor their technical development. Second, review your own risk management framework. Are you sizing positions appropriately and setting stop losses based on technical levels rather than arbitrary percentages? Third, start paying attention to options flow data in your own analysis. It's a powerful tool that most retail traders ignore. If you found value in today's analysis, I need you to do three things. First, hit that subscribe button and ring the notification bell. We publish new technical analysis every week and you don't want to miss opportunities like these. Second, share this episode with other finance professionals who could benefit from this systematic approach to stock selection. Third, leave a comment below telling me which of these three opportunities you find most compelling and why. Remember, successful trading isn't about being right all the time. It's about being systematic, disciplined, and managing risk effectively. These three opportunities give you a framework to practice those skills with real market data and institutional positioning insights. And before I sign off, a quick but important disclaimer. I am not a SEBI registered analyst, advisor, or broker. This podcast is strictly for educational purposes and should not be considered as investment advice or a stock recommendation. Please do your own research or consult a registered financial advisor before making any investment decisions. Thanks for tuning in, and I'll see you in the next episode.